Europe now has its first serious attempt at a bank-backed euro stablecoin. On December 2, 10 of the continent's largest banks formally launched Kivelis, a new Amsterdam-based entity that will issue a fully regulated, euro-pegged stablecoin in the second half of 2026. The founding members are BNP Paribas, ING, UniCredit, CaixaBank, Danske Bank, KBC, SEB, Banca Sella, Raiffeisen Bank International, and Deca Bank. Together they have already applied to the Dutch Central Bank for an electronic money institution license under the European Union's Markets in Crypto Assets Regulation, or MiCA. This initiative is explicitly designed to reduce Europe's dependence on US dollar-denominated stablecoins, which today represent more than 99% of the global stablecoin market by value. Every on-chain payment, every tokenized settlement, and nearly every DeFi transaction in Europe currently runs on infrastructure ultimately tied to the dollar. Jan-Oliver Sell, the newly appointed CEO of Kivelis and a former Coinbase executive, framed the project in clear strategic terms. A native euro stablecoin isn't just about convenience. It's about monetary autonomy in the digital age. The timing is critical. Only days ago, on November 25, Tether halted redemptions for its euro-pegged token EURT, citing the increased compliance burden imposed by MiCA. That decision effectively removed the largest existing euro stablecoin from circulation and created a regulatory vacuum that Kivelis is now positioned to fill with a fully compliant alternative. Current euro-denominated stablecoins remain marginal. Their combined market capitalization stands below 350 million euros, less than 0.5% of the global total. The European Central Bank has repeatedly noted that this segment poses limited systemic risk today, but it has also stressed the need for strict supervision as adoption grows. Kivelis has chosen the Netherlands as its home precisely because the Dutch Central Bank has emerged as one of the most constructive supervisors for MiCA-licensed issuers. Once licensed, the Kivelis stablecoin will be backed one-to-one by euro-denominated reserves, redeemable at par, and available for both retail and institutional use across blockchain networks. The primary focus is seamless on-chain payments and settlement within the Eurozone, not speculation. This project represents one of the most concrete steps yet by traditional European finance to embrace blockchain technology while remaining fully inside the regulatory perimeter. It also arrives as the European Central Bank continues preparatory work on a potential digital euro, creating an interesting dynamic between private sector innovation and public sector caution. In summary, 10 established European banks are pooling resources and regulatory capital to build a homegrown challenger to USDC and USDT, one that keeps the euro at the center of the next generation of digital payments. If you found this analysis helpful, please consider giving the video a like and subscribing for regular updates on institutional adoption and crypto regulation. Thank you for watching, and I'll see you in the next one.